everyone, Marlene Leslie here, and I'm sitting with Kevin Pacheco to discuss everything about insurance, investing, and building wealth. Okay, Kevin, are you ready for some tough questions today?
I'm ready. As long as it doesn't have to do with Shakespeare and there's not a pop quiz, let's do it.
No problem. I don't do Shakespeare. Okay, let's get into it. But first, for those who haven't met you, who are you and what do you do?
I'm Kevin Pacheco. I'm the founder of Advantage Wealth of Insurance. I'm a licensed insurance broker, wealth manager, and investment advisor.
You say insurance and investing, but that can mean a million things. Want to elaborate?
It does mean a million things, and that's what I'm here for, is I help people navigate through their life to build something secure and something that moves forward and not backwards. It's all about protecting what you're building your whole life. So using insurance for tax strategies, final wishes, and even your legacy. And on the investment side, I want to build your wealth. I want you to start saving. I want you to make a path to move forward. Everybody needs that clear path to move forward, and that's what I'm here for.
Yeah, it sounds pretty important, and most people don't know where to start. So, what got you into all of this?
It was a combination of things. So just naturally, I love to help people. If it's family, friends, strangers, if I knew something, I would just pass it on. So this was a combination of that and my love for the markets. I love numbers, and I follow the markets for the past 15 years with making plans. Put me on an Excel sheet and I'm there for hours having fun. So a combination of both. And then I realized I've really learned and saw firsthand what insurance does for families and how much it could help a family during the times that they need it most, and even just put protection in place to help you during your lifetime. It's amazing.
And not a lot of people think about that. I think it's not something that's on the forefront of your mind. Tell me why, is it better to use a broker instead of going directly to an insurance company?
Yeah, much better. A broker, I'm contracted with the top insurers in Canada, so I can go anywhere. Think of me as your personal shopper for insurance. So I used to work for an insurance company for a very short time. And when you go to an insurance company, they just sell you their products that they have, and it might not be the best fit for you, especially if you're going with your spouse and you're doing it holistically. So needless to say, my sales were not good. And I was there for a short period of time, but I ended up leaving because I found that I can do much better as a broker, because like I said, every insurance company has a sweet spot. And it's just about matching my client with the right company.
I mean, I guess because you're a broker, you have access to more products than as if when you were working for that other place, you were limited.
1000%. Everybody needs something different. It's not a one size fits all. So I just go to each insurance company, and I'm still that, I get a lot of people just want to stay with one company. I am that one company, and I will do the heavy lifting for my clients.
And is that what you mean by sweet spots?
Yeah, exactly. Every insurance company has a sweet spot, meaning they have a specific client they want to cater to.
Right.
So if you're 30 years old, that company will give you great rates for a 30-year-old. Or if you're 50 years old with diabetes, a lot of insurance companies are not going to touch you. So there are insurance companies that will give you favorable rates. The other ones might insure you, but you're going to be paying a high premium. So that's when it falls into that insurance company, not one size fits all. So I will do that heavy lifting for you and find the company that fits you, tailored to you.
So you save everybody from doing their own research. You do it for them, basically.
Exactly.
What products and services do you offer?
For products, I do life insurance, living benefits, and investment outlets. For services, I'm your 411, and I will find ways to get things done and look at your whole life holistically, because they all tie together.
Let's talk about investment side. Why is it better to invest with a broker rather than a bank?
That's a great question. With a broker, I'm not restricted to any funds. I get to go to the best in class fund companies to get the best in class funds for my client. With the big banks, they're limited to their funds. And I'm not saying that they're bad funds, but why settle for less when you can get more? And my analogy with this is investing with the bank is like going to a fast food joint for a steak. But then you can go to a broker, which is like getting that steak at a chop house for the exact same price and probably even more benefits than you get at the bank.
Right. Right. That's actually a pretty good analogy. I like it. You mentioned living benefits earlier. What does that mean?
Living benefits are insurances for while you're living to help you protect your family, protect your wealth, and keep you on track to retire when you're 65. So there's a whole bunch of them. There's a handful of them. There's disability, critical illness, long-term care, even personal health benefits and group benefits.
Okay, so what's a good reason to have all these different types of insurances or benefits while you're living?
I'm just going to summarize them because call me for an appointment and I'll go into detail. But disability insurance, it replaces your income if something were to happen to you, if you fall sick or get into a car accident. Long-term care will help you later on in life for those costs if you go into a retirement home or just need assistance around your house as you get older. With personal health benefits, if you don't have dental health benefits, eyewear with your work, this is great, and they're great for business owners.
Like self-employed, right?
Exactly. And then there's group benefits. Group benefits are for companies that want to attract talent. It's a way to kind of save your bottom line because you're paying a little bit less for benefits, and the value that it has for the employees is tremendous.
Yeah, because I know a lot of people that don't have benefits. So I think any employment that offers that is like fantastic.
Exactly. And it's not as expensive as people think they are. And then there's critical illness, which is the second most important insurance that I believe someone could have. Well, just let's put it this way. You know, on Facebook, the GoFundMe pages, this would put that to a stop. Gives you a lump sum that if you fell sick.
So basically, you don't need that GoFundMe because you have that critical illness insurance, which will cover you through this time.
It's exactly that. You fall ill and you'll get a lump sum payment and will help you if you need to take time work, if a loved one needs to take time work, or if you need to do adjustments to your house to fit you due to that illness.
Right. So like if you need to maybe restructure your home or renovate your home, if you need a wheelchair, it'll help you do all that as well.
That's exactly it.
Perfect. So do you prefer the insurance side or the wealth management side?
Ooh, tricky. I'm going to say the wealth management side. Like I said, I love numbers. I can play on spreadsheets and with my screens all day just to kind of analyze as I'm very technical. But I've gained a love for the insurance, and mostly because I've seen on how much it could help people,
Yeah.
how much it could help families during a time that they need it most.
Yeah, I think it's so critical to have some kind of insurance now that you're discussing all of these things, anything that could happen, because a lot of people don't have that money just sitting around to, for a rainy day that they can use for something like this, right?
That's exactly it. Let me ask you a question.
Sure.
If you or your spouse lose your income for 6 months to a year, where would you get the money to maintain your lifestyle?
I mean, at this point, you're right. We'd have to dip into either our savings or what we have put aside for the kids' college fund. Not that we want to do that, but I mean, realistically, what other choice would we have? Or a credit line, which would go into debt.
That's what these insurances are, is to make sure that you don't go backwards in life and you keep moving forward.
Right.
That you don't have to sacrifice your child's education, or you don't have to sacrifice your goal of retirement at age 65. So we put these in place and it will just help you maintain if something does go wrong. And let's face it, look around. The amount of people that get sick and everybody thinks, oh, it won't happen to me, it won't happen to me. And they ignore it until it's too late.
Right. So I think what you're saying is it sounds like people should be calling you to get some in-depth info on how beneficial these types of insurances can be, especially while you're living.
That's exactly it. And I tell people, let's have a free information session and let me teach you about what's out there, because a lot of people don't know what's out there.
Well, there's so much information that I feel like we can't even touch upon it. Because I think we need a whole other session of just what these things do and how beneficial they are.
Yeah, we'd have to make a movie, a 2-hour movie, minimum, 3-part series.
So you talk about wealth a lot. Now, when people are investing, do most people come into your office and say, okay, well, I don't have much to invest, or is it just the wealthy that come in and say, here's this much money, invest it all? Like, I'm sure you deal with people from all walks of life, right?
You know what? I do. And that word wealth, it could be very intimidating. It depends on how you define it. Wealth could be 50 or $100 a week that you put away into savings and starting today. And in time, it will be a lot more. So you don't need a lot of money. That's one of the misconceptions about
So you don't
investing.
have to be rich.
You don't have to be rich.
Okay.
It's all about starting today so you don't have those regrets later on in life saying, oh, I should have started 10 years ago. Start today. Start with $50, $100 a month, and we'll make it happen.
Wow. And what's the biggest misconception about investing?
Biggest misconception is that you have to be a market genius, and that's what I'm here for. And you have to have a lot of money. Like I was just saying, you don't have to have a lot of money. I have clients that just are still in debt, and I'm like, just put away $50 or $100 a month away and let's grow it.
Start your portfolio.
Exactly. And the compound interest over time in 10 years or in 5 years, because we started a little while ago, they're already saying thank you for me putting them on this road.
I think so. Basically, what you're saying is you need to start. So stop procrastinating and start. Okay. What are big myths about life insurance?
Life insurance. The two big ones that I can think of offhand is that you can get it no problem. The thing is that there's an approval process. It's
So
called
it's
the
not that
underwriting.
easy.
It's not that easy. There's a whole process, and it depends on your age and your health. And you're not entitled to life insurance. You have to do an approval process. And the life insurance companies are doing their due diligence on you because it's a big risk that they're taking because they're going to be giving you a payout. So they ask about your family history, about your history. So there's always insurance companies that will insure people, but at what rate?
Right. And do you shop that around?
Yes, that's going back to the sweet spots is I take a deep dive into my client's life and I find out what their needs and wants are, and then I just tailor it to them.
That's great. Okay. What's something you wish everyone knew about insurance?
Get it when you're young and healthy.
That makes sense. Because I'm assuming the older you get, it's a lot harder to get life insurance.
That's exactly it because as we get older, we get medical conditions. And I can't tell you how many times I've seen somebody in their 40s and 50s and wanting insurance. And when we take a deep dive with the medical questionnaire, it kind of slows the whole process down.
And could increase your premiums.
It will increase your premium and even postponement or even rejection altogether.
Oh, that's tough.
Yeah, it can be.
Okay. What's the difference between temporary insurance and permanent?
Temporary is like renting protection for your family. So it's like car insurance that it never builds in value. It is the cheapest form and you just kind of pay on a monthly basis. And if you don't use it during that time, which you really don't want to use it, there's nothing there for you. With permanent insurance, it's more of an investment. And it's something that could, if structured properly, that grow over time.
So would you say in the end, if something were to happen or had to use it, or if you didn't use it, is there a lump sum at the end of that for your clients with permanent life?
Well, permanent life is actually a guaranteed payout. So you get permanent life insurance and your family is going to receive a payout. And that payout could be for tax strategies, even legacy planning.
Right.
So with permanent, it's a guaranteed payout. There is cash value. So along the way, there are benefits that you can use it. You can use it to leverage with loans and so forth.
Wow. Why would you apply for a term policy?
Applying for term policy, if you just need temporary insurance for a certain amount of time, like a mortgage or business loan or a car loan even. Or the other reason would be if you don't have the budget. If you just have a smaller budget, temporary insurance is the cheapest form.
Okay. Can you change a temporary policy to a permanent policy?
Yes. And it's as easy as just paperwork because you already went through the approval process when you applied for the term insurance. So when you want it to make it permanent and a guaranteed payout, it's just paperwork and it's in the contract that they'll give it to you, no problem, no questions asked. And let me give you an example of this, because I do talk about this client because she wants me to share her story. I call her Lucky Lucy.
Oh, I love that.
Yeah. And she's 36 years old now. But when she was 30, she applied for life insurance, a small little policy, permanent policy with a big rider, because she didn't have the budget and she wasn't sure of her needs at that time. So she got that policy, and 3 years later, she actually got diagnosed with cancer. She's good. She's cancer free.
Right.
She's well, but now she has medical issues and going forward for the rest of her life to maintain this. So if she were to apply today, she would actually get flat out rejected. And then if she waited 5 years, maybe there'd be an insurance company with a sweet spot to insure her, but she'd be paying 3, 4, 5 times as much as she would as somebody of the same age. So what we did was we actually converted her term rider into a permanent policy that's a guaranteed payout. So now she has that protection in place for her family, because if she didn't do it then, she wouldn't have had the opportunity to do it now.
So just so I'm understanding, even though she had temporary life or temporary insurance, she was diagnosed and was still able to convert that policy with no questions asked.
Yes, and that's how, when you get the term, there's a contract that the insurance company gives to you that you are allowed to convert that into permanent policy at a later date without going through the medical underwriting.
That's incredible. And especially for someone with that kind of story.
Yes. And she tells me to tell people.
She's an advocate.
She's an advocate, and she tells all her friends, she's like, get it today, because you don't know what's going to happen.
And you don't, like you said, she was 30 years old when she got it, and she was diagnosed 5 years later?
3 years later.
Later, wow. And she's so young.
Yes.
That's amazing. That's an incredible story.
Thank you.
Okay, so with temporary insurance, it's generally less expensive than permanent, right? Can you give me an example of that?
It is. And there's a lot of factors. If you're male, female, smoker, non-smoker, age. But you know what? I'll give you an example, because I was working on it the other day. For a 32-year-old female non-smoker, for a 10-year policy for $1 million was only $26.10 a month.
What?
Yes. And the husband was also 32 years old, non-smoker, $1 million, and it's only $35.73 a month. So that is, the term 10 is the cheapest form. And we're just kind of doing it now because they're unsure what they need later on, and they kind of don't have the budget for it right now. So I say, get your foot through the door. Let's go through the underwriting, because they're both healthy. And we're going to convert it later on when budget is better and you have more of a plan, and they start having kids, and they'll probably need that to be a guaranteed payout rather than just renting it for the next 10 years.
I mean, at that price, how do you afford not to?
That's what I say.
That's amazing. And if they wanted to, like you said, later on, right now, that works for them because they don't have kids. And if they have kids, things change, right? To convert that over, do they need to go through another medical process?
Nope. They just call me and I do the paperwork, send it over, they sign it, and it's done.
Great. Sounds amazing. Okay. Is term insurance, this is a big one because I think people often get confused. Is term insurance the same as mortgage insurance through your bank?
Oh, I love this question. Love it. It is not.
Okay.
With lender's insurance, when you get your mortgage or loan or even your visa, they just say, check the box if you want insurance, and you'll be paying that month. I explain it as you're paying insurance policy for the lender to get their money back, because your family will see nothing. Yes, they will pay off the house or the loan, but your family will get nothing of that.
Right.
So let me give you an example. I had a client and he had 20 years left on his mortgage, $400,000 mortgage left. And I asked him, I said, how much are you paying for lender's insurance? And he said $80 a month. So he was late 30s, typed up a quote for $500,000, and it was $35 a month. And the most important part is that we're going to do the underwriting. We did the underwriting now. So if something were to happen, it would get paid out pretty quick. And also, if something happened in year 19, his family still gets that 500,000 that he applied for 19 years before, but with lender's insurance, they're only going to be paying off the house and you're still going to be paying that $90, $80 every month until that time.
Wow. Just doesn't make sense. And I actually hear that like mortgage insurance through a bank is a lot more expensive. Like I know you use the example of $80, but I've heard even more.
Yeah, I don't want to
Get into that.
get into
We'll,
the
we'll skip
quoting,
that.
but I will say this about that insurance is, some people change lenders. So if you change lenders during your 25-year mortgage, you're going to have to get more insurance. You're going to be older and it's going to be more expensive. This is the locked in premium for that 25 years. You can move wherever you want. And at the end of the day, your family's still going to get that full amount that you applied for.
How long does life insurance policy take to pay out?
That's a good thing. Very quick. The insurance companies recognize that the families are grieving. They don't want to cause any stir. They just want to make it as seamless as possible to help that family. That's why they do their approval process in the beginning and not the end, like the lender's insurance. So this way, to answer your question, I've seen it within a week to 2 weeks once the beneficiary submits their paperwork.
So that's pretty fast.
Yes. The insurance company, this is their business. So they have a reputation to uphold. They don't want it to put cracks in a foundation.
And what is, or do you have a favorite insurance product that you always sell to your client or think that they should have?
Everybody's different, so it depends on my client, but my all-time favorite is actually juvenile insurance.
Juvenile?
Juvenile, yeah.
So I didn't think you can insure a child.
Absolutely. And I say this because it's a great gift from a parent and a grandparent, and it guarantees that that child will have insurance for its whole life.
Oh, I think I get it now because you've already set up their premiums at such a young age.
Correct. And there's more to that. And I'll use an example of my son, even that after he was born, my parents got him a participating policy, which grows over time. And it was only a 10-year. So they only have to pay it for 10 years, but he's covered for life. And he has guarantees that he can get more insurance later on in life. It's not that expensive. And I'll tell you, they pay $1,400 a year for the next 10 years. So that policy is actually only costing them $14,000. And the beneficiary, the face value is over $100,000. The reason why that's so important, and I want to use this, is that child gets to use that policy during their lifetime as well, because it has a cash value. And they can use it if they need a school loan, they can use the cash value in there. When they want to buy a house, they can use that as leverage with some lending facilities as collateral. So it's that gift that just keeps giving, that it's the smartest thing you can do with a child. And not only to mention that if a child gets a medical condition, it might be harder for them to get the insurance. So to get it when they're young is probably the best bet.
Yeah, it's something I never thought about was insuring a child, but it makes so much sense when you put it like that.
Yeah.
Let's bounce back to investments. What's your favorite investment or fund company?
I can't tell you my trade secrets.
Oh, come on.
They're probably watching and I don't want to be biased. But, and that's the whole part of being a broker, is I get to go directly and pick which fund company I want to deal with, and dealing with the fund company is best in class. But I will give you an example of I have a shelf, and because it depends on my investors and their risk tolerance. So there's this one that I have that since January 2024 to January 2025, it's up 58%.
Wow.
Yeah.
Is it too late to invest in that, or?
No, it's not. It is I even look at the fund manager, and he's, he has a great track record. And even the company itself, they are a private company. They're not public. So they have one goal, is to make their investors money. They're worldwide. They have offices all over the world to do the research on the companies that they're actually investing in. That's why using a broker is probably your best option.
Okay, I don't know what you're doing after this, but I think we need to chat about this fund.
Absolutely.
Okay. I've heard of an investment called a seg fund or a segregated fund. What does that mean?
Do you know what a mutual fund is?
Yes.
Okay, so for the people that don't know what a mutual fund is, I'm just going to kind of quickly say it. So you have a box. I have my analogies. So
It's
you
okay.
have a box and you have a whole bunch of different companies in that box. So it gives you the diversification that if one company's down, the other company is up, and slowly over time, they all go up. So a segregated fund is the exact same as a mutual fund, but it actually has an insurance wrapper on it. And it gives you a whole bunch of benefits to save on taxes on gains. It gives you beneficiaries if it's a non-registered plan, and also has guaranteed on the downside for your investments. And it's also creditor protected.
So basically, a seg fund has an insurance around it that will protect you, and it also has tax shelter benefits, things like that, is I think what you're saying.
Correct.
I'm assuming that you said a lot more. I'm just trying to
Summarize.
a little bit. What's the biggest mistake people make with their TFSAs?
That's almost one of my first questions is, do you have a TFSA and where is it? Is it sitting into a fund? And I ask that because this is the number one mistake I see people do. They're like, yeah, I have a TFSA at my bank and I put whatever X amount of dollars every month. And I ask them, what investment is it sitting in? And they're like, nothing.
Nothing.
Yeah. And I'm like, okay, so you're not paying taxes on the 0.0001% that the bank's giving you. So let's take that investment, put it into what's comfortable for you, for your risk tolerance, and let it grow. And when it grows, all that money is tax free. And the one thing is, it's not locked in. You can take it out and put it in just like any other bank account.
Wow. I think I need to talk to you about that too.
Well,
Pretty sure mine's just sitting in there. If you've never opened a TFSA, how much can you put in it?
great question. If you're over the age of 33 years old, you can dump $102,000 today in and let that grow tax free. So basically, once you hit 18, you can open up a tax free. And every year they just increase it. Right now the increments are 7,000 every year. So even next year that 102 will be 109.
Okay, I have a question for you. I mean, I have several, but
Yeah.
what do you charge per hour if someone were to set up an appointment?
Nothing.
Okay, that sounds great.
Yep. I don't charge anything. I never collect funds from my clients. The insurance companies pay me, the investment companies pay me. So that's why I always tell clients or potential clients, call me, let's sit down and have a free information session, and it will cost you nothing.
I mean, free education sounds good to me, right? Do you offer any other services outside of insurance or investments?
I offer a lot of financial advice and debt repayment. And I'm going to have to back up to that last answer, actually. So there is a little bit of fee on that sometimes. And sometimes I just waive it depending on the extent of it. But if someone wants a financial plan, I will get it done for them. And if it's something that I don't do, I have a circle of influence that I will refer you to.
Well, it sounds like you got your bases covered.
I do.
I like that.
I will say this actually is about wills. I don't do wills, but I want people to get their will. It should be one of the first things that you should have.
Right.
And a little statistic is, 50% of Canadians don't have a will, but the fact is 100% Canadians are going to pass on one day. So how do you want to leave your life to your family? Do you want to leave it a mess and frozen accounts, lifestyle changes? Or do you want to kind of pack it away neatly that it's seamless and your family is allowed to grieve?
Yeah. And it takes the pressure off them, right?
100%.
Oh, sounds interesting. I think everyone should make an appointment and get their financials in order. Okay. So we've talked about all this stuff. There's a lot of information, but I was thinking maybe we could have a little fun.
Absolutely.
Absolutely. Okay. So I'm thinking I'm going to give you some choices. One word answer, you're going to give me back. What would you choose? Okay.
Ooh.
It's like speed round.
Can I see this beforehand? All right. All
No.
right. Okay.
No. Okay. Ready?
Yeah.
RSP or TFSA?
TFSA.
Term or permanent?
Permanent.
Budgeting app or spreadsheet?
Oh, spreadsheet.
Oh. Real estate or stocks?
I'm going to have to say real estate.
Okay. Registered fund or non-registered fund?
Registered.
Vanilla ice cream or chocolate?
Vanilla.
I like that too. Pizza or a hamburger?
Mm.
Or both?
I'm going to go pizza. Or both, but pizza, yeah.
Okay, one more. Early bird or night owl?
Night owl.
I hear you. I hear you. But getting up in the morning is terrible.
It is. Not a morning person, but, and when I am, it's straight to my screens.
That's right. Okay, so I have another question. What if someone's just not ready yet?
That's totally fair. I still say call me and make that plan. Everybody thinks they're not ready, and people are more ready than what they think they are. And it's all about starting today. And it's all about making a plan and following that plan. So just think about it like this. If you're walking through a forest, would you walk through where all the trees are and down and leaves, or would you walk through the path?
Right, path.
You'd walk through the path because you know where you're going,
Right.
you know how to get there, and it's a lot clearer rather than just cutting through the forest. You make plans for your weekend, your week, your vacations. Why not make plans for your money, your life, and your family?
Right. It makes so much sense when you put it like that.
So if someone's not ready, it's just about having those conversations, because I come across a lot of people and they're more ready than they think. And it's all about starting. And a lot of people don't know where to start, and they sit there and they just, I don't know where to start. I'm not ready. I'm here to kind of take the noise out, sit you down, create a plan, and give you the first step. And then it's up to you to do the rest.
Well, there you have it. That's our session for today. I think that was so informative. Thank you, Kevin, for coming on and discussing insurance, investing, mutual funds, and all the services that you provide to your clients. I think you're a wealth of knowledge, and I think people need to call you today to start planning your future.
Thank you for your time and the hard-hitting questions. I did have fun. I love the speed round. And hopefully you got something out of it too that you can pass on to your clients, as Marlene's a real estate agent in the Hamilton area. So thank you. And for the clients that want to book an appointment instantly, go to my website, advantagewealthii.com. You can book an appointment instantly on there.
Great. That sounds great.